Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. The 3-day meeting of the Monetary Policy Committee of the Reserve Bank of India is on and is expected to conclude tomorrow. One of the routine items on the agenda of the MPC has been interest rate fixation. But a non-routine item, a special item according to us, is to do with restructuring of bank loans. The Reserve Bank of India needs to come up with some kind of a circular or regulation permitting the restructuring of bank loans, and that's the need of the hour. This item was on the agenda of the MPC even in its last meeting, but in its wisdom, in its last meeting, the MPC decided to skirt the issue. They did not take any decision and they preferred what is called a wait and watch approach. It is now time for the Reserve Bank of India to announce its stand on restructuring of bank loans. And why is such an option? Why is such a move needed? The fact is that the pandemic, the lockdown, the close down have caused havoc on the economy. And because of that, entities have seen that their businesses have disappeared or they have depleted considerably. Cash flows are missing and survival of enterprises is at stake. And in this process, all have been affected. Every sector of the economy has been affected by the pandemic and the lockdown. And with cash flows depleting, as we said, servicing of debt, repayment of bank loans is becoming a big challenge. Once the moratorium is lifted, huge defaults in repayment of bank loans is expected, and that is going to shake up the entire banking and financial system. The best of borrowers, according to us, need handholding at these times of hardship, and it is one such moment where if action is not suitably taken, then the health of the lender as well as the borrower is at stake, and that demands restructuring of bank loans. Reserve Bank needs to take a decision. This kind of a demand for restructuring of bank loans has been coming from borrowers since quite some time. The finance minister also said that the finance ministry has been in active talks with the Reserve Bank of India in order to come out with a circular on restructuring of bank loans. SBI economists say that a sector-specific approach is needed and restructuring of bank loans is needed. On the other hand, SOCHIM, the industry association, says that the impact of the pandemic is widely seen. Enough evidence is there to see that its effect has been widespread and that everyone needs a restructuring. It cannot be just sector-specific. The economists of the SBI even say that the lockdown has been unplanned and unintelligible, and that is their justification further for a sector-specific restructuring to be announced. There is enough evidence which says that defaults in the banking system are going to be rampant and extensive once the moratorium is lifted. There are enough reasons to think so. In its recent financial stability report, the Reserve Bank of India very clearly says that NPAs in the system will go up by almost 50% from now to the 31st of March 2021. The RBI report even says that in FY20, the downgrades of corporate ratings numbered 4,300, whereas in the previous year, in March 2019, they were just 2,000. In other words, the financial health of corporates has been deteriorating. That is further reflected in the fact that almost 50 to 60% of borrowers have chosen to opt for the moratorium option and are now waiting and watching. While this is happening, the system's situation is further evident from the fact that banks are risk averse. They are not lending, they are not willing to lend, and they have preferred to park their money over 8 lakh crores with the Reserve Bank of India instead of giving it to the borrowers. While we witness this, the fact is that the economy is contracting, and all that means that the ability to service loans has got depleted considerably, and a restructuring option will have to be announced. What is this restructuring option and what do we mean by it? Typically in a restructuring, whenever a borrower defaults and he is found to be viable, additional time is given to the borrower in order to repay his loans. His repayment is rescheduled and is now matched with his changed cash flow scenario. That is what we need in this case also. We need to restructure the loans of borrowers such that their repayment is now in tandem with the emerging economic scenario post the lockdown being lifted. And if that is not done, defaults in the system are going to be huge, and so will be the NPAs. Before we discuss what needs to be done in the restructuring, let us see what is the present scenario and what is the emerging scenario post the lifting up of the moratorium. The present scenario, as we said, is that because of the lockdown, cash flows have disappeared, businesses have got depleted, and that has directly affected the repayment capacity of borrowers. That means when the moratorium period is lifted, there is going to be a deluge of NPAs, and the Reserve Bank itself confirms the probability of a huge rise in NPAs. This is a time when businesses have got disrupted severely, and that means that their revival, even if they are viable, is going to be a long drawn process, and that is going to need restructuring of bank loans. Borrowers are also going to need additional finances. Wherever the business is sustainable and viable and the entity doesn't have money to restart, banks will have to selectively even lend further, despite the fact that the borrower may be defaulting on its bank loans. It is that period when the IBC has been suspended in operation, and banks are also going to face difficulties in recovery of bank loans. While this is happening with the borrowers, in the case of banks with rising NPAs, rising potential losses, their profits are going to disappear, their capital is going to disappear, and their ability to lend further is going to be considerably restrained. Rising defaults in the system will mean financial instability, and as we said, what is at stake is health of the borrower, health of the lender, health of the economy at large. And despite this being the situation of all being in a problem, banks will need to be patient, and they will need to give time for repayment of the bank loans. Let us now consider the terms and conditions and the modalities and contours under which a restructuring option should be announced by the RBI. Should it be across the board as an option, as a right given to every borrower, or should it be on a case-to-case basis to be decided by the bank concerned, or should it be only sector-specific? We think that the right and responsibility to decide whether a case should be restructured or not should be left to the bankers by the Reserve Bank of India. It should be their responsibility. And in deciding whether they want to restructure a loan account or not, according to us, the bankers will need to go by the viability parameter. In case the loan is found to be viable, the bankers must restructure it. And in case it is not found to be so, then they must not. They must be willing to accept it as an NPA and book those losses, rather than doing a farce of a restructuring and postponing the inevitable. In deciding whether a case is viable or not, the bankers, according to us, will need to take a long-term perspective. In our opinion, this disruption has caused such a situation that revival of businesses is going to be a long-drawn affair, as we said, and the bankers also will need to take that kind of a long-term perspective and then support those viable entities with a restructuring option. We repeat, the bankers must not misuse the restructuring option in order to postpone the inevitable, especially when they know that an account is not viable and is going to be written off finally. It must be done in a genuine, meritorious manner. Further, wherever the bank thinks that an account is being restructured and additional money needs to be given to the borrower to revive his business, in that case, the banks, as part of their restructuring proposal, will also need to give additional funds to the businesses which have been found to be meritorious and viable, in order to save those businesses, in order to revive those businesses. And for that, in order to be able to give additional loans, as we said, bankers certainly will need to shore up their finances. We all have been noticing that bankers today are in a hurry to raise additional funds, and the total funds being raised by the system are in the range of 1.5 lakh crores. That money will come useful to banks to lend in restructuring options to those businesses which need that kind of money, which deserve their money for their revival. And while we say that this kind of a restructuring should be done and freedom should be given to the bankers, we certainly would like to say that regulatory supervision in this case must be stringent, and that responsibility lies with the Reserve Bank of India. And while implementing this kind of a restructuring by the banks, the lessons of the last CDR, the last corporate debt restructuring, must not be forgotten. In that regime, banks have misused the restructuring option. They have postponed the inevitable. They have restructured loans which are clearly unviable, and they have hidden the reality in order to window dress their accounts. Those cases, as we said, which are not viable, they cannot be restructured. Losses must be booked by the banks, but they must not hide the reality, because the restructuring option will certainly come with that potential misuse, and that needs to be prevented. And that, according to us, is the responsibility of the Reserve Bank of India in particular. This is a point of time when many borrowers are going sick, and when many of them go sick, even the lender goes sick. And that's the gravity of the situation when we discuss restructuring of bank loans. The million-dollar question that is posed to us is, will a restructuring of bank loans be announced? We think it is imminent. We think that the potential default in the economy, in the banking system, is so high that if a restructuring of bank loans is not permitted, the entire system will go unstable again, and that needs to be prevented. So in our opinion, whenever the Reserve Bank takes a call, it will be in favor of announcing a restructuring option. We do not know whether it will be sector specific, we do not know whether it will be across the board, and we also do not know whether it will be on a case-to-case basis, but we would certainly recommend a case-to-case, merit-based basis of restructuring of bank loans. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, subscribe to our YouTube channel.